Welcome back. You're watching The Money Show, and it's time to answer our viewers' portfolio queries. And for that, today on the show, I have with me Gautam Kalia, head super investor, Mirasit Sher Khan. Gautam, hi, good evening, and welcome to the show. And Gautam, let's begin by taking our first question of the show, which is by Mr. Nandan Rao. I think you already have his portfolio details on you, and I can see him having, all right, 11 funds. For next 20 years, he wants to stay invested. He's just 31. I wish I had him on the phone line because we really want to know his thought process behind having so many funds in his portfolio. Okay, so let's talk about the funds which he should remove from his portfolio, the funds that he should be exiting. Gautam.
Yeah. So what I'll tell him is, because he's also mentioned that he's got a target. So yeah, his existing SIP of 30,000 rupees per month could create a corpus of about 3.4 crores in 20, 21 years, assuming a return of 12% per annum. And if he's able to increase this SIP amount by 5% a year, then that 3.4 crores will become 4.4 crores. So that's the real power of compounding if he's able to stay the course for the next 20 plus years. When it comes to his schemes, I think he's got a little bit of everything. And yes, that is a problem. While individually the schemes are good, from an allocation perspective, I see that there's a large allocation to the mid and small space as well as focused flexi cap ELSS space. So what I would suggest is that he needs to remove the quant flexi cap fund and move that to Nippon India large cap fund. And otherwise, he's got these some schemes which are sectoral, where he's putting in 500 rupees a month. So that is something that he could discontinue because there's a lot of overlap between the other schemes and the sectoral schemes. So he's not really getting anything. Plus, the allocation is so small that it may not really make a difference, even if the funds do very well. So I would say that start pruning off all the funds that are less than 2,000 rupees a month over time and consolidate. There's no need to have so many funds in the portfolio.
Okay, so that's the recommendation for Nandan Rao. Let's take Swarna's query. And Gautam, Swarna says that she wants to invest 5 lakhs in lump sum for her children higher education, and time horizon is 8 to 10 years, aggressive investor, and 4 to 5 funds she wants as recommendation.
Yeah. So she wants to invest 5 lakhs over the next 8-10 years. So what I'd say is, again, stagger your investments. Don't put in lump sum. The portfolio that I'll suggest now is you can put in 1.5 lakhs in ICICI Prudential Blue Chip Fund. Again, like I said, stagger it. I'm just telling you the end amount. HDFC Large and Mid Cap should have 75,000. Nippon India Growth Fund can have 60,000. Bandhan Small Cap 40,000, Parag Parekh Flexi Cap 1,25,000, and Mire Asset Grade Consumer Fund 50,000. So that's the allocation of 5 lakhs, which she can invest over the next 6 months to 1.5 years, staggered, whatever her liquidity allows her to, how her liquidity allows her to invest.
All right. One last question from Urmila. She wants to invest 15,000 each month in mutual funds, and what should be her first fund to invest?
Great time to enter the market, Urmila. So what I'd say again, I'll build a portfolio for 15,000. ICICI Prudential Blue Chip Fund start with a SIP of 4,500. HDFC Large and Mid Cap Fund a SIP amount of 2,200. Nippon India Growth Fund 1,500. Bandhan Small Cap Fund 1,500. Parag Parekh Flexi Cap Fund 3,800. And Mire Asset Grade Consumer Fund 1,500. So that way her 15,000 SIP portfolio can start ASAP.
Okay, on that note, it's time to wrap up. And thank you so much, Gautam, for being on the show and answering all our viewer portfolio queries today. Thank you. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.